This is John Kvale, and this is your February 2016 all-new formatted capital market and financial planning tip review. I've got some great stuff for us today, and we're getting closer and closer to tax season, so I've got some tax information. I've got some really interesting comments about the capital market, so hopefully you'll like it in the blog post. Let's get right to the blog post. Thanks. All right, so here is the actual blog post. This is the February Capital Market Review blog post, as you can see here. Since we're getting closer to tax season, I wanted to mention our favorite, reach in your last year's tax dues pocket and save some money. One neat thing, it's quite cumbersome, but I've mentioned this before, is to itemize your standard tax deduction. That's a deduction you get back on your itemization sheet, and basically they give you a standard one based on your income level and your zip code. And you can, if you have an excessive expenditure, think car, think boat, think something of that nature, you may want to look at itemizing. The second part is the HSA, health savings account. If you have a high deductible insurance plan, you may be able to contribute to an HSA. If you're unsure, call your insurance company and find out if it's HSA available. Fund an IRA. If you're qualified, if you don't have another plan, funding an IRA is an oldie but a goodie. And another favorite is a SEP. If you have some 1099 non-W2 income, maybe it's consulting or not all your income is W2, you might consider doing a SEP, Simplified Employee Pension Plan. All right, it gets jiggy here. We're getting down to the throes. Tomorrow is Super Tuesday. I'm actually recording this on the last day of February. So tomorrow is Super Tuesday, and the next week or in a week or so we have some big numbers. What is interesting, I'm political agnostic other than Donald, and I enjoy watching what's going on. At a recent conference, Ian Bremmer told everybody that basically no matter what company would be, what president would be elected, it would make no changes to the company. Now, the important part is he had talked to 20 of the top 100 CEOs in Davos. Thought that was pretty interesting. All right, now this is something that I don't normally do, and I'll let you read the verbiage here. This is talking strictly about the capital markets, and this is the voodoo of technical analysis. Fact or fiction, strange or not. Here's something very interesting. I put some marks on this. This is the S&P 500. We're in kind of no man's land right now because earnings have been flat to not up, not down. And so while it seems like the capital markets have done, all they've done is this, what actually they've started doing since January is they bounced between 1810 and about 1950, 1960. They've done this, it's amazing, 1810 almost to the penny, then back up, then back down, oh it's scary, then back up. I would expect that the next move may be back down, and we may do this. We could, in theory, do this all throughout the year. It's scary down here. Oh, it's all peaches and cream up here where we ended the month. What I want to get across to everybody is really it's just backfilling. We're just going back and forth. Well, it seems like there's a lot going on. There's really not right now. We're going sideways. There's other things happening. We're watching this very close. Don't get us wrong. We're watching this very, very close because it's important. But really, there's a lot of movement here, but we're just going nowhere. So that's your February capital market financial planning review. I've had a lot of travels. I've got one more travel at the end of the week here, and I'm going to bookend it with a trip with the family on spring break. So thanks for everybody. I've got a couple of different camera angles that hopefully you will enjoy, as well as good audio. Thank you so much. We'll talk to you next month. Have a great day.